Bitcoin has been down for quite some time, there's panic selling in the market, and some whales are taking advantage of this dip. But the question arises, when will Bitcoin's price recover? This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so you don't drop latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, it's not financial advice, and wish you the best of luck in your crypto ventures. Despite the massive purchase of over 11,900 Bitcoin by MicroStrategy, the world's largest cryptocurrency continues to lose steam, falling further beneath the $64,000 level. However, analyst Willy Woo makes a strong analysis of the Bitcoin mining market and historical trends to determine when the Bitcoin price will start to recover. After facing a strong rejection at $72,000 earlier this month, the Bitcoin price has been heading south, correcting over 10% from the June highs. As Bitcoin loses crucial support levels, the chances of a Bitcoin price drop to $60,000 are growing further. As per historical trends, the Bitcoin miner capitulation has continued for months after the halving events. Putting his focus on Bitcoin miner capitulation and hash rate recovery, analyst Willy Woo explains that the Bitcoin price recovery hinges majorly on weak miners exiting the market along with the subsequent recovery of the hash rate. Woo said, "I'll break it down in simple terms. When does Bitcoin recover? It's when weak miners die and hash rate recovers. This is one for the record books as it's taking a lot of time for miner capitulation post-halving. Probably can thank ordinal inscriptions boosting profits." Wu compared the current situation with the hash recovery during the previous halving cycles of 2017 and 2020, and this typically coincided with the slow summer months when usually the affluent Wall Street investors go on vacation. As of now, it has already been 61 days since the Bitcoin halving event in 2024. On the other hand, the US Bitcoin ETFs witnessed the fifth consecutive day of outflows on Thursday, June 20th. Yesterday, the total Bitcoin ETF outflows stood at $140 million, with Grayscale's GBTC reporting a single-day outflow of $53.1 million. Meanwhile, the BlackRock Bitcoin ETF experienced inflows of just $1.48 million. These consecutive Bitcoin ETF outflows show that institutional interest in Bitcoin has been waning a bit amid the Fed's current stand on holding interest rates higher for a longer than expected period. This has also led to the selling pressure on Bitcoin price. Matthew Hogan, Chief Investment Officer at Bitwise Asset Management, has shared his outlook for crypto, specifically why Ethereum may be a good addition to an investor's portfolio. According to Hogan, it's down to diversification, Bitcoin and Ethereum's use cases targeting different and historical analysis. Commenting on the diversification aspect, he compares the investment landscape during the dot-com boom to the current crypto market. He wrote, "It's very hard to predict the future with precision. Ask any investor from the dot-com boom who bought AOL or Pets.com. They got the overall bet right. The internet is going to be big, but the specifics wrong. Today, crypto is an emerging technology with all the potential to change the world. But while it's impossible to predict the future, one way to go about it is own the market. A scenario where it's 75% Bitcoin and 25% ETH could be a good default starting place." The second reason why the Bitwise executive thinks that it might be wise to add ETH to a portfolio is Bitcoin and Ethereum's use cases. While Bitcoin is the best form of money that has ever existed, Ethereum's focus is on making money programmable. Stablecoins and DeFi are among the top applications relying on this new system. While difficult to say what applications will make the most of the new technology, broader exposure to both Bitcoin and ETH may work for a portfolio. For the third reason, Hogan says it's the historical analysis. Adding ETH to a portfolio over a full crypto market cycle has historically boosted both your absolute and risk-adjusted returns compared to adding Bitcoin only. Notably, the portfolio with ETH added shows both a higher return and lower maximum drawdown. But Hogan also says, "My view in a word, if you want to make a broad bet on crypto and public blockchains, you should own multiple crypto assets. If you want to make a specific bet on a new form of digital money, buy Bitcoin." We've all heard about TON lately, and despite the market situation right now, it has been showing some promising price action, and it's not going to stop anytime soon. TON is playing catch-up with Bitcoin and showing parabolic moves. The decentralized Layer 1 blockchain, the Open Network, or TON, has grown into one of the most popular chains and is seeing high activity as users flock to the ecosystem. CryptoQuant revealed that the network's on-chain metrics are skyrocketing, with its daily transfer volume reaching 10% of Bitcoin's figures. These parabolic metrics highlight the network's unwavering growth. The average daily transfer volume of Bitcoin is $50 billion, and at the time of writing, TON's daily transfer volume hovers between 5 and 10 billion. TON's figures indicate the network has achieved around 10% of Bitcoin capacity, despite being only a few years old. Besides the surge in total value of transactions conducted daily on the TON blockchain, the number of on-chain holders of the Open Network's native token TON coin has skyrocketed. The analyst disclosed that the number of TON holders has risen 10x from 2.9 million a year ago to 32 million at the time of writing. On-chain experts have traced the surge in TON metrics to several factors, including the launch of a TON-based economy on the Telegram app. Telegram recently introduced an advertising system that pays 50% of revenue generated by channels to their owners exclusively in TON, not fiat. The initiative attracted an unprecedented number of new users to the TON chain. In addition, TON unveiled the Open League program in early April, introducing a long-term initiative program for TON users, teams, and traders. Through the program, the TON Foundation will disperse 30 million TON, worth roughly $188 million, to community members through airdrops, quests, and liquidity pools on the network's decentralized exchanges. You can also buy, sell, and trade TON on CoinEx. CoinEx is one of the best exchanges you haven't heard of. Like Gate.io or Mexi, they offer a lot of coins, but more importantly, they offer the high-quality coins you want. They even have a special bonus event on June 24th where you can get 50% off your TON buys with their CoinEx dibs. So check out CoinEx and their special event with the link down below. Digital asset manager 3iQ has filed for a Solana ETP listing on Canada's Toronto Stock Exchange, a North American first if approved. QSOL would offer exposure to the digital currency SOL and the daily price movements of the US dollar price SOL. Holders of 3iQ Solana ETP may also accrue interest from native SOL staking yields, which the firm estimates to be around 6 to 8%. Coinbase Custody and Tetra Trust would serve as custodians, while Coinbase Custody would provide exclusive institutional staking infrastructure for the Solana fund. The 3iQ Bitcoin ETF BitQ and 3iQ Ether staking ETF ETHQ are two of 3iQ's main cryptocurrency products listed on the TSC, which boasts around $233 million and $38.7 million in net assets. Bloomberg ETF analyst James Seyffert noted that Canada had spot Bitcoin and spot Ethereum ETFs before the US even got futures ETFs for either asset. Franklin Templeton and other US asset managers have praised the Solana network in the past, but no firm has announced concrete plans to pursue a spot Solana ETF in the country. More than $1 billion worth of Solana ETPs are already offered around the world, such as the 21 shares Solana staking ETP and the ETC Group physical Solana product in Europe, and it would be nice to see this happen in Canada and the US next. Layer Zero's token launch on June 20th caused a massive surge in fees on Arbitrum, leading to a record $3.43 million in daily revenue for the blockchain, a bump of around 16,680% compared to the day prior. Layer Zero launched the Zero token on Thursday, but triggered criticism over its obligatory donation mechanism, which requires claimants to spend a small amount of money per token to nab their allocation. These mechanics push up the average gas fee on the blockchain, which hit 89 cents, up from its typical less than 1 cent fee. This led to profits soaring on the day to $3.29 million, another record high for the network, according to Dune Analytics. Layer Zero wrote in a June 20th X post, to claim Zero, users must donate 10 cents in USDC, USDT, or native ETH per Zero. It added the donation goes to the protocol guild, which helps fund Ethereum developers. Layer Zero has argued its token launch is not an airdrop, as airdrops aren't compatible with the goals of equitable distribution, community building, and protocol health, as many recipients have little to no interest in the project long term. This was Arbitrum's biggest revenue day since earning $2.13 million in revenue on December 14th, the day before it went offline, due to a surge of inscriptions on the network. The Layer Zero token, meanwhile, has tanked. It's down 25% in the last day to $3.16 after hitting a peak of $4.79.